Shares of the Big X, U.S. Steel, jumping today after an upgrade by Cowen & Company. The stock now more than 360% in the past year, albeit off a very low base. Welcome to Trading Nation. I am Brian Sullivan. Wald with Oppenheimer, Boris Schlossberg of BK Asset Management. Boris, color me a little bit nervous about U.S. Steel. Not the company, right? We've had the CEO on. He's a great guy. We appreciate his time on CNBC. But when I see a company up 360%, on not much meaningful change in the core business, it's hard not to raise an eyebrow. What are your thoughts?
Well, I kind of agree. I think a huge part of the volatility is just simply analysts changing their mind from downgrades to upgrades. That stock has just been up and down like a yo-yo across Wall Street as analysts have either downgraded and upgraded based upon, like as you said, small movements in the core business. But the two things that are driving it now that are kind of interesting is, one, the supposition that the Trump administration is going to be much, much tougher with the Chinese on steel barriers and trade tariffs against steel, and that should lever X's business going forward. On the other hand, I think the much more negative aspect against steel is that the end user product, the automobile sector, is actually slowing down. Today I saw data that shows there's a tremendous amount of buildup on auto car lots. And if the auto business is starting to slow down, if we sort of hit peak SAR, then I think X could be a little bit of trouble, and that's why I think, as you said, the stock may be a little bit overbought.
Yeah, Wald, technically, obviously, you know, a massive run. I don't want to call it parabolic, but it's probably not that far off of that. Is there any way to still recommend the stock?
I think it's getting a little late for that based on our work. We do see some mixed evidence. I think on why we side a little bit more cautiously is that the stock is getting back to some pretty formidable resistance in the low to mid 40s, which marked the stock's peak back in 2014 ahead of what was a very significant downturn. I guess on the plus side, the trend is still positive. X is trading above its rising 200-day moving average. I think it is a play on the cycle. As long as the cycle's higher, I think it could probably trade higher over, at least from a near-term basis. So just kind of some mixed evidence. I would say overall, we see more attractive opportunities elsewhere right now.
There you go. Can't say it better. More attractive opportunities elsewhere. Maybe the money's been made in U.S. Steel already. Boris and Ari, thank you both very much. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.